Let's talk about another parameter that we need to take into account in order to validate a level, to score it. And this is the time spent at a level, the quality of the base, the basing of a level. That is very important. This is a very important feature of a level, as important as the departure we cover in the first point. We have some rules, and some of them are like no more than 6 candles at the base, that we will require validation of a zone, confirmation of a zone with other patterns that we are using. As I don't forget, a wiki base will negate a level and force confirmation, because a wiki base normally means a reaction to a previous CP pattern normally, or another previous value of peak. And this is also very important. A weekly zone can look great on the weekly chart, but it can have more than 6 daily candles. If your entry time frame is the daily and not the weekly, or even the 4-hour, and you have on your entry time frame more than 6 candles, then you need to wait for confirmation, even if the weekly looks great, because your entry time frame is not the weekly, it is the daily, the 4-hour, the 1-hour, or whatever time frame you're using. So you need to wait, you need to see that your entry time frame displays that quality at the basing. Okay, so here on this same chart, we've got the this drop and this rally, and look at this basing over here. We've got that base. That is a few candles there. Okay, it's more than 6 candles. So this is a bad base. The structure is bad, so we can't take a short from there. Okay, price reacted a little bit from there, and then it was removed, easily removed, because this is too much trading in the zone, and also too much trading in the zone with the weekly demand area in control. We've got a problem. Okay, so too much trading in the zone, not good. Okay, when we've got wiki areas like here, let me zoom in a little bit over here. Over here, look at a rally, this doji there, and then we've got a drop and then a rally, sumo rally over here, a few candles there. This is not well formed at all. Okay, so on the daily it is not well formed. This will probably be a weekly CP pattern, but because we have more than 4 or 5 candles at the basing. But if your entry time frame is the daily, this was the trend at the moment, and you've got a level here, level on top of level, like 2 levels there, let's say like that. Now when we look at the weekly, we've got a CP. So dojis, single doji candles, and this I haven't added here, it is on the lesson, single doji candles are lower odds. Okay, so when we've got single doji candles, we have lower odds. Moreover, if that weekly single doji candle is right below the reaction to previous weekly higher time frame area of supply and monthly higher time frame area of supply, here tested already. So we've got a lot of nested areas over here. Lower probability for that one. We wait for confirmation on those zones like here. But your entry time frame is not the weekly. Your entry time frame is the daily. So on the daily, it is not well formed. Look at these candles. It has nothing to do with this nice base over there, but it was too high. CP is high and the curve are low probability. So imagine that your entry time frame is the 4-hour. Oops. Now let me take a look at the 4-hour over there. Look at that. Now you analyze the 4-hour. Do we have any good base on the 4-hour? No, we don't have. We don't have an explosive move to the upside like here to the downside, a rally-based drop. If we copy and paste this area over here, okay, and we paste it over here, we had that, then yes, I would be taking a more aggressive type of trade. But if my entry time frame is the 4-hour, I see a lot of trading here, many candles, and I don't see a nice base. Okay, like for example, let's take a look at this base. Okay, see, drop base, rally, strong move up, strong explosion. This is a sumo rally. Okay, remember we talked about that sumo rally on the departure. This is not good at all. And that can also be seen on the daily there, but base, and also on the weekly single doji candle. So that goes against the rule. So if my entry time frame is the 4-hour the daily, even if the weekly looks good, in this case it didn't look that good because it was a single doji candle, you drill it down to the your entry time frame, the daily doesn't look good, and then okay, if your entry time frame is the 4-hour, then that 4-hour area doesn't look good at all. So you need to look for good areas on your entry time frame, not the time frame higher, okay? Because your entry time frame is defined as that. That's because it is defined as entry time frame. Otherwise, uh, you would have to look at the daily while looking at a time frame which is not your entry time frame to take an order. You just have to look at your entry time frame. That is why an entry time frame is defined as entry time frame and not the curve or not anything else. Okay, you have to follow the rules and the definition of your trading plan. Okay, so we were talking about this time spent at the level. Look at this. Okay, like how many candles? Like 10 candles, 9, 10 candles. So if price rallies all the way up there and then the trend is up on the daily and the weekly and all that, this level will probably not hold because we have a lot of trading in the zone. Same here, look at that. Look at this reaction over here. A lot of trading in the zone. So this is nothing and it is already retested here, okay? Which we covered already. It's been tested, freshness of a level, okay? It's been retested, yes. So now test it once. This one level over here has been tested. Yes, it's been tested. This one, no, it hasn't been tested. This one here, neither. Okay, but now we are at a weekly area of demand. So when a weekly area of demand is in control, look at these areas over here. These areas don't tend to hold. Can they hold? Yes, but rules are rules. You have to follow them, and you don't have to be affected at all by what happens to these areas if they work, even if the rules are not said they wouldn't work. Okay, rules don't say the level will work or not. They talk about the probability of a level, and we have to think in a statistical mode, in probability, in numbers. This is a numbers game. This is not a yes, true, yes, no, true, false, 0, 1. No, it's just probabilities. We have low probability here. Yes, we don't take the trade. And we forget about it. We switch to another time frame, to another pair. Hundreds of instruments if you are trading forex and equities and indexes, and it's too much out there. So have your portfolio and focus on another pair or instrument. And this is it about the time of in a zone. Maybe we have some, look at this, a lot of trading in the zone here. Let me take a look at the monthly, for example, and see we've got a lot of trading in some area. So a lot of zone trading, but this is not on the weekly. Look at this, a lot of trading here, a lot of trading here. See, when price rallies, it's removed completely. So that is a very important feature, a parameter that you need to take into account. The time spent at a level. Okay,